I'm going to get comfortable even. I'm kind of leaning to the side. My gaming chair that looks like a car seat.
All right, I'm going in.
Good morning, y'all. All right, here's that extension. We got this little end pattern setting up. There's angular resistance right up here, about 381.30. But there's your break signal. Don't like jump right into that on that pivot break. You want to make sure you're knowing what you're doing. It can very well be the extension of that 50% retracement and be a reversal right here. So I'm going to wait and see what this shakes out. I was already able to, run some ES little scalp on this. Meanwhile, I'm also messing with BIT, Bitcoin Nano, so kind of trading this volatility here. This is chart nasty. I got tons of lines everywhere, and man, it's just a mess.
Charts.
Why is my pre-screen so blurry?
Oh man, I'm glad I didn't take that trade yet.
There's the breakdown. If you guys are looking at me on YouTube, is the display blurry?
I am not an image on YouTube, so I do not know. Sorry, boss.
Oh, that's okay. This is where the preview that I'm seeing looks dirty. It looks blurry. I don't know.
So you have the 8, the 15, the 200. What other moving averages are you using other than Bollinger Bands? Or is that a Bollinger Band?
So, yeah, this guy here is a Bollinger Band. And other than that, I just use the 8 and the 200. And the Bollinger Band comes equipped with a 20 period for the center band. And some people don't like having that many indicators on their chart. That's fine. I don't either.
I have more, and it's actually getting a little bit confusing. So that's why I'm like trying to get them at least spread further out, so that I have a better view of what really is happening.
Cool. Thanks, James.
Good morning, everyone.
Good morning.
Quick, stupid question, Jeremy, please.
Oh, there's no stupid questions, man. Ask away.
So I know that you always follow the mother bar, which is red or green. Any difference between the red and green?
As far as finding price levels, no, it doesn't matter if they're red or green. You're just looking at the extremes. So you're looking at the point where price is likely to pivot.
So you're using the bar, the mother bar, as where the price is gonna go, whether it's going down or up?
Yep. And it's just a matter of retracing the previous trend. So like you see a bearish trend here. You see a clean reversal pattern. You see a break of resistance, which is always going to be the first high in a double bottom. You go and look left, and you can go and tag all these little control levels. Like if you were looking at this on a 10-second chart, you would see pullbacks on each of these little levels typically. But I'm going to go and look for the big bar and find out where the extension is, just looking at the top of that bar and draw a line. Look at the top of the level after a break. Where's the top of the trend? Right here. Run a line out. And it doesn't matter what trend you're retracing. Whenever you expect a 50% retracement, you always look for the control levels within that retracement to draw your lines. And sure, if you averaged all this, you could probably put a line right in the middle of that, about 380.68. But it's just as simple as getting your price levels from your most recent price action on the chart you're trading.
Thank you, Jeremy. I'm learning.
No problem, man. That's why we do this. We love explaining every little detail, and I'll keep saying it. There are no dumb questions. These are all very, very relevant and very intelligent questions to be asking.
So we're on a new leg right now, right? And when we broke down and went back below the 200 moving average, does that little tiny consolidation there, does that actually yield a, this is the first leg of the flag, and now we've verified we're now going into the second leg?
Only if it breaks resistance of its own accumulation. So like you have, look at this as if it was just a little miniature pennant or a miniature bull flag.
Right.
So your bull flag is always going to be defined by your mother bar resistance. Well, here's your mother bar. There's your resistance right there at that pivot. If you get continuation, close a bar above that, watch for an expansion breakout to start running the rest of the leg. And you've got, typically in a measured move like this, if you're counting this as a measured move, you look at two things. One, you get the full length. So we got, what, about 380, 80. The full length down here is about 370, 880. So about a $2 move is possible. I always cut that in half and go half leg at a time. So my target would be on a breakout from about 380.80 to maybe 381.80 would be target 1 on a half leg breakout. Target 2, obviously, 382.80. Where does that take us though? Where's the key pivot? Well, we know 382 has been a major playing pivot for a long time now. We love 382. It's an old friend. So definitely be mindful that it's likely to have a pause at that pivot and be a little under or a little over half a leg. And all we got to do to watch to confirm that is whether or not this pennant is going to actually break out or if it's going to reject here. And we know where our previous price levels are, so if it gets rejected here, that is kind of typical. You get those 50% retracements. If the previous trend is dominantly bearish direction, oftentimes these 50% retracements will get rejected at that 50% level and continue for a bearish measured move. So until you see an actual longer term reversal saying that this is likely to bounce here, you kind of pay attention to your short-term action to confirm the long-term action. And we have a very rough-looking diamond pattern here. You know, if you look at this whole thing, just kind of use your mind's eye to eliminate all the noise on the chart and look what the price action is telling you. You got range expansion followed by range contraction. That's a diamond. So where's that slope to? You know, figure out about where your angles are going to be. So like if you had this as your point for angular support, run it down to about equivalent of a reciprocate of where the high was, right? So your imaginary line will be right about here, 377.50. And then your slope would be back up here. And what do we know about diamonds? Well, oftentimes they'll fake one way and rip a face off the other way. Well, we've broken angular support on that, tested a pivot and bounced. Does have a good chance of being a longer term reversal, but we won't touch it until we confirm the direction. So if this does break into a pennant and start setting up that bullish measured move leg, we'll know it as soon as it breaks its own resistance. But if it gets rejected here, we'll know that, okay, there's still some strength in this bearish trend here that's kind of dominating, and we can go back and test that pivot again. And that's just a matter of finding your pivots, finding your control zones, and finding your price levels to trade to. That's why I'm more into day trading than swing trading in these market conditions, because these market conditions are choppy and very difficult to swing trade. That kind of always brings me back to the old thing, like, you know, having been a mechanic for so long, I always realize that there's a tool for every job, and sometimes you got to be able to recognize when you need a different tool, set the tool you're trying to use down, and go grab the right tool. And that's what all these little skills are. When you see that you have the ability to scalp short-term price action, but the long-term price action is choppy, well, grab your short-term price action trading tools, you know. All right, so we're still accumulating here. This is actually looking a lot more likely to give us that quick extension. And the break is going to be very sudden, so when you want to take that trade, be careful that you make sure that you get a clean break with a bar closing as a break, not a like this little fake signal here. You got this wick up here. You want to make sure this 1 minute candle is going to close a clean bar.
I really would be happy if this turns into some sort of like expanding megaphone.
Right? That'd be really cool.
I remember when you first introduced me to the megaphone, what was it, like a year, two years ago almost, and then we were trading SPY, and literally every day was a megaphone.
Yeah, it was over and over and over again. And we've kind of noticed that, like, SPY kind of it likes to run with one pattern over and over and over again until it gets tired of it. And then it switches, it mixes it up. It'll go to a different pattern. And then for the longest time, we had those channel breaks with 50% retracements over and over and over again, and they went out of style. And then suddenly we had double bottoms that would break into bear flags, double bottoms that would break into bullish measured moves, bearish measured moves. It kept throwing a gambit of variations of one pattern over and over again until it got tired and morphed into something else. And then recently with SPY, we've been seeing those repeat diamond patterns, for instance. We've got a whole bunch of those. And then as of this previous 30-minute chart here, you zoom out, it's kind of throwing a diamond, but it may be getting tired of that. Maybe we're going to go into some actual longer-term swing trade setups, which are going to be, instead of seeing these little double bottoms on a 1 and 5 minute, you'll start to see them stretch out into like daily and hourly charts. In fact, let me let's turn the noise off for a second here and look out a little bit. So we've had our diamond here. That's setting up our angular. I might go and wipe my SPY lines off and start them over again in a little bit here. So, the concern is that we've got this little, retracement bull rally, or relief rally as we would call it in a bear market. And the market's not sure if it's going to break bullish or bearish here. And if you just set up an angular resistance here, we're already above it. That's happened before. And we accumulated and broke down. So coming to a point where I think we'll start being able to get into more swing trading sooner or later. But we've got some volatility to get through in the meantime. So it's just selectively, like, what's the best tool for the job right now? Well, day trading. So there we go. We're threatening a break here.
How can you tell?
Just keeps sitting here right in the top of that range. And let me draw this real quick, as if my chart wasn't already pretty nasty looking. Oh, it's already drawn. There's a pivot there. That's that 381 pivot. It's also the control zone of the extension on the 50% retracement of the descending channel here. So if this or that, being that it's about 10, almost 10:30, this might shake a couple more 1 minute candles before we get an actual break, and it can go either way still. This can either reject and break down, or it can accumulate one more and throw a bar straight through resistance.
I've noticed a lot during these last few trading days that, like, right around the time, because I usually take lunch with my family around like 11, it seems like the market gets right up to the point where it makes a move. I want to get into a position, and then right around the time that I'm getting ready to leave and start making lunch for the family or whatever, the market just sort of stops and halts. And this is before the normal 12 o'clock that most people would take, right?
Right.
And I'm just like, and then as soon as I start making lunch, that's when it starts moving.
Yeah, it seems to be that way. I mean, the market just kind of flattens out between now and about 11:30, and it does start to move right around 1 lately. If we or 12 to 1 lately, if we look back at history, we can look back at our 5-minute chart and kind of see, right in this mess right here. Well, yesterday's not a good example. Right? Yesterday was just a good bullish measured move setup. And that was price action we had laid out from way back a couple, 3 days ago. It was just stemming from this base as a bullish wolf wave setup. And then we had extension lines channeling from it. For some reason, I didn't get my midline all the way down to the break. And it respected it very well yesterday, because you can see where price reacted to it on this. We got one leg measure move here out of a double bottom, and it was a rising double bottom. And we got another leg, pull back, and another leg. And actually, this is, if you looked at this on the 1 minute chart, it would be two legs here. But it set up an accumulation here. It was threatening to break out to hit that 386 pivot. Didn't quite make it beyond 385 with enough gusto to continue that move. And it just went sideways. About 11:30 to about 1:15 before we started to get that that midday breakover. What news event came out at that time? Something happened. I can't remember what it was. But at that point, we looked at the 1 minute chart and we realized that there was going to be a break here. And that's around the time I got distracted. I had to go and take care of some family stuff. Yay, a spam call. Alright, so regression line was rising channel. Wolf wave was the angular resistance. Then we had a trend line, a simple trend line for the angular support. Center line was the regression. When we threw that bar down, pretty easy to set up the bearish legs on that. Hit that key pivot, the 377.50. Bounced right off that sucker with a wick. Ran up, bullish measured move, two legs. Well, it came in whole, so we got a whole leg and two half legs. But it wicked right to that regression line and then broke down and closed like right at the 382 pivot. There was rejection, there was your break, that was your signal. And I was yapping about yesterday's news when it happened. Go figure. But that was the break, that was the setup. This is the retracement. Look for this to stop and pause right at that 379.50 pivot. If it does set up here and you went short on that break, if it sets up here a couple of rejection bars, that's where you would either pause, take your profit from your put side, wait for it to break back through and continue before you go short again, as if it was a 50% retracement. Or if it just closes a nice bar through this sucker, you get 100% retracement all the way down. And you know, you mentioned that you're thinking this could set up a big megaphone pattern here. It's kind of starting to look like it will. I'm just waiting for the same situation so I can go short Bitcoin some more. Call that a day. And I'll probably start trading some MES right around the middle of the day here. I'm still messing around with that 1 second chart and it's going fairly well, but I want to make sure I run and practice it because not everybody can go and trade a 1 second chart, but if I can use a 1 second chart to go and verify 10-second trades, like we do with the multiple time frames, and then set that up to where it can become rapid, repetitive practice for any of you guys who want to practice that price action with enough repetition to actually get somewhere in a short amount of time. That's the way to do it. You know, just go paper trade the ES and the MES and run those really short charts.
US DOE EIA ethanol production 1051
I gotta say that 10
mil
second is my
BBLS
favorite right now.
plus 11 mil BBLS.
Yes.
And if I can get the price action right, I can definitely scalp those little bear flags and bull flags.
And they run so fast and they set up so clean. And
now, do you use limit orders when you're scalping those?
It depends on the conditions. Like if I can get a limit order set up fast enough on the ES, I'll run with it. But if I can't, I'll just hit the market button. It all depends on how fast the bars are breaking. Like in times of high volatility, you'll barely have time to hit the market order to get those. And in times where it's slowing down, like the middle of the day here, you can definitely get limit orders set up on the break and be ready. Compound that with the 1 second chart. The one thing I should mention on the 1 second chart, if you're going to use that to optimize your entries and exits on the 10-second chart, it's going to be, it'll look a little weird, but use those HA candles on that 1 second chart and then use standard candles on your 10-second chart, and it'll actually give you very clean signals. But it's weird when you go to try to trade HA candles on a 10-second chart because you don't necessarily get the cleanest signals. Like for example here, let me see if I can pop this up on SPY with the 1 and 5 second, close enough approximation. So you get just this noise, basically, these little tiny low volume candles here on the 1 second chart. But if you go and change that to HA, it becomes very readable. There's your signal. So compare that to a 5 second chart. I don't have a 10-second chart here for some reason. I guess we can go 15. You get fairly clean signals, but you get enough ticky-tack here where it's just like you're not confident in the move anymore. But you switch that to regular candles, and aha, now we've got some confidence. So we know that that's the end of that bull run. This will break over and test the 20 period. And we can trade the break later. If it decides to set up a bullish measured move, cool, we've got all these levels to the left. And just like we saw the levels on the 5-minute chart here for control, you look at this 15-second chart. Same thing, just on a much faster time scale. So you got your little reversal here, you've got your extension. This becomes your new resistance point, and then your target's set up approximately. So you go next control bar, target's here. If it doesn't make that and rejects that, this breaks bearish. Boom, it's breaking bearish. If it did break out bullish, you get your target 2, target 3, extensions all the way up here. You just keep looking left on that trend to find all the control zones, and that's going to give you all of your price points and essentially your very short-term pivots or targets, if you will. There's the breakover, nicey nice. And we can go back to the 1-minute chart and see what's going on here. That's our pivot, 379.50. Push the bar right through that sucker. We got some angular support here, which is set up from that previous trend. That's your primary target for this short-term trade.
Right down to it.
And if it continues to go, the next target after that is the pivot, the 378.50 here. Bam. Nailing that with force. And it's same thing. Until you start seeing a wick at the bottom of this, you can stay in that trade. And if it does run to the next pivot, well, 377.50 is pretty easy to see. And these levels all came from previous price action. And you're just using one time frame to confirm another. There's a wick. That doesn't necessarily mean get out. I mean, you can go and verify that with your shorter time frames. Go to your 15-second. Okay, there's a pause. Cool. You can use the shorter time frames to maximize your entries and exits. There's a 5-second. And if you're going down to the scale of a 1 second, you'll probably want to switch to HA candles. And look here, we've got a 5-minute long wick. That bar closed with a big wick on the pivot. There's your angular support kind of in here. You can see this candle did breach it a little bit, but these angular lines don't have to be exact, but damn, they're close. It's just, I mean, you got all the tools that you can apply to this, and they all work in symphony. Here you had your nice bar down right to that angular, threw a doji down with a pin bar right into that pivot. Bear trade over for the moment. And if this becomes a trend, we can always streak the trend. So I find that sweet spot delta area. I'll take an entry at whatever strike that tells me to enter. I see that pause candle. I'll close it right there. And then I'll look for the next strike with the same risk if I decide this is going to trend. And I'll grab that option and ride that sucker down until I see a pause. Rinse, repeat. Never exceeding the original risk.
How can you tell when it's pausing?
When you get a pin or a doji like this, or you get a flash of green at the lower Bollinger Band, that type of thing, you'll see that it typically tends to bounce. Also, you got to know where the pivots are, where your price points are. It's kind of a big field of stuff to look at, but you'll know when the trend pauses at the first sign of green, and then you always go to your shorter time frames to verify what you're seeing.
Well, when you scalp, do you scalp on continuation, or do you scalp reverse, like short-term reversals as well?
Anything that moves. So I'll scalp the short-term reversals, like this little double bottom here. I'll scalp those bullish, know where my levels are, and then when they break, I'll flip my position and scalp them bearish too. It's like being able to trade in both directions and being able to just flip the switch and go from bullish to bearish. And this was the short-term setup. Right here, you got a pile of dojis on the 5-minute chart. You got this accumulation zone here. As soon as that broke, that was the signal. Go short. I mean, you can learn your price action on one thing at a time. Like when you're trading with penny stocks, to start cutting your teeth on price action, you're looking for all these bullish setups like double bottoms, bull flags. You're looking for all that stuff. And then when you go bearish, you literally just invert those. Those structures actually invert very cleanly. And you can go, okay, it's a bear flag. You can go short on a bear flag the same way you'd go short on a bull flag. The targets are all the same. You just look left, find your price levels, find your pivot points, mark them out, and trade from A to B. Whoops.
Thank you.
No problem.
I'm quiet.
What the heck happened there? Bitcoin futures did not move the way they were supposed to.
Okay. Go back.
Well, nuts.
All right, this is our 1, 2, 3. We've wicked into this area 3 times now on a 5-minute chart. 4. On the SPY. That's 1, that's 2. For a signal.
Ay, ay.
Ay, is right.
Looking at the size of the moves on the Bitcoin Nano futures, and it does not look anything like this chart. That was goofy. And it skipped right over my my trailing and ran out to the moon. Lame. That's alright, I'll make it up later.
This is more a MES market than an options market.
Yeah, for sure. It's just slow, grindy moves. I mean,
Yeah.
not to say you couldn't scalp the little.
No. Yeah, couldn't get a move here and there, but there's no clear direction yet.
Yeah, and it's just like if you're trading at, in that sweet spot, 3 to 5 days to expiration, this is where a lot of this garbage is going to eat a bunch of your time decay.
Well, it's 2 legs down on that bear flag. This might be the third, but it seems to have stalled a little bit. There it goes.
Yeah.
Let's see if this pushes. That's may or may not be it. I'll grab a hat real quick.
Oh, breaking the 378.50. Here we go. There's your leg over. Bands are open nice and wide for it. That's another thing. Like I've often been asked why I still keep Bollinger Bands on my chart, and like I like teaching with it, but hell, I use them too if they're there. Why not? You get that range expansion on the Bollinger Bands. It gives you the volatility expansion, and when you see price moving very strongly in one direction, those bands open up. It's as if it's accepting the move. And right here we got a little bit of chance of contraction right here. Then the same thing occurs. You go and look at your different time frames and confirm. We're still angled down on a 5-minute chart. We still have potential to continue this trend. Let's go ahead and look at the 30-second chart. Okay, a little curl up here. It might pause. All right. Go to your 15-second. I got a little contraction here, but it's starting to open up a little bit. We can start watching a few candles at that point to see if we get a continuation on this trend or not. But it's very simple to just kind of use that as a gauge for your volatility. Is it going to allow enough volatility for this move to take place? So you got like a tight pinch here, opened nice and wide. So you get that rejection there. That's a signal. It gives you a clean idea that yes, this move can get volatile. It can run. And there it did. Now we're contracting again. Watch for expansion. Opening up, getting wider after a contraction. Rejected the moving averages here. Still under the 8 period. Rejected the 20. It's accepting the move. That's kind of what they're for. I mean, I call them training wheels. Then they literally act like that. They just kind of set the parameters of what your limit of motion is. And it's like you lean. Typically, you're riding on the tire, and every once in a while, when you're learning how to ride a bike, you lean on one training wheel or the other. Well, here's the direction. If you think of you're going straight here, you lean on the right training wheel, you're going to tend to go to the right. And, if you leaned on the left training wheel, you're going to go to the left. There's your tire. Until you make that transition from one wheel to the other, or one training wheel to the other, you're going to go in the direction you're leaning. So here we go. Here we are leaning the other way. Kind of a cute way to think about it as training wheels, but it makes sense when you've seen it for many, many, many hours of screen time. It becomes as recognizable instantly without even thinking as price action does. I mean, you see a setup, you get used to seeing that setup enough, it becomes muscle memory. You just glance at the chart like, aha, I know exactly what's going on. It becomes that fast. Get that screen time as much as you can, because when
Absolutely.
When things start clicking into place and you start realizing that, hey, I'm seeing things clearly, and everything becomes muscle memory from that point on. You should almost be, well, like I'm sitting here like my demeanor is kind of like as if I'm bored or something. That's about the right mindset. You realistically you're watching price action to the point where you're able to just make clean, concise reactions to it. Trade what you see. You don't have to really think about it. You just do it. We're back in that angular, stacking on top of it. We're above the 8 period. This can be a short-term reversal, but what's going to be the confirmation? Well, look at our long-term chart. What is likely to happen here? Well, we're on top of that angular support. Hit that key pivot, whacked it with a couple pins. What is likely to happen? Well, in short, you look at this control bar here, and what's it likely to do? 50% of it. Where's that wick stop? About 379.10. Watch this candle. How much time we got on that thing? Pull up my futures chart so I can get a better time clock.
About what, 2.5 minutes?
Yeah. Oh, more than that, actually.
More than that, 3.5, sorry.
Yeah. So it's got potential still to reach that. What's our 1 minute chart telling us? It can get
Playing
there.
around some.
It can get there, but what's it got to do beforehand? It's got to step across that 20 period.
Yeah. We're above the 8 right now. But that was only on the 1 minute. That was a 1 pullback 2. That was only 2 flags.
Right.
And then it stalled.
Exactly. But we got our measured move.
Yeah. I'm just looking at that. 5 minute. Still not clear direction for me yet.
Yeah.
I jumped in earlier and got boo-booed. So I'll wait to trade so I can make up my mistakes.
Well, I get to open my TradeStation account this week and start messing with that so I can do some trading on. Getting a little irked about the Bitcoin Nanos. That was not a move that was expected. That was lame.
Okay, let's go look then.
Well, it spiked to 19,240.
I was looking at something else when I said that. Sorry.
Yet the Bitcoin chart itself went nowhere near 19,000. It went nowhere near 17,500 for that matter. That is the stupidest thing ever. Alright, screw you Bitcoin Nanos, I'm done. We'll go to the ES.
Lots of wicks at the top, a SPY on the 5 minute chart, and we got lots of wick on the bottom where it's hit on the 5 minute chart.
Alrighty. Well, that's enough of my my complaining.
Sideways. Moment. Now you got 30 seconds, a little more than 30 seconds on this 5 minute candle. Got that hammer so far.
There it is.
There.
Just about wicked to that 50%er. Yeah. Good enough for government work.
And I see that now. Looks like it's going to roll back over. Head back down. Let's see.
This is just going to be kind of chopped for the rest of the afternoon here.
I'm thinking it's going to be like that, like you say in CHOP. Because there's indecision.
Right.
The elections didn't turn out like everybody expected.
Right. Alrighty then, I'm going to wrap it up on YouTube. Sorry it wasn't more exciting this morning, guys. But we'll,
Question, Jeremy.
Sure thing.
Do you include the wicks with the mother bar too?
Sometimes you do, but most of the time I don't. I know that there's one thing that's fundamental about candles. It's your body of the candle is the open and the close. The wick is the high and the low. I know that we're likely to revisit an open or a close much more so than a high and a low. So if you think about what caused that wick was weakness. So when you see the wick above the body, you'd rather not mark a target of being to the weakness, and that's where the extreme, where the volume ran out essentially, and the candle sucked back into the body. So you'd rather mark the bars as your price targets because you know that there was strength in that move. It was an open or a close. So when I'm marking stuff on shorter time charts, sometimes you go look at the longer term chart and it'll appear like I marked it through a wick or something, or used a wick as an area of resistance or support. Let me see if I can find an example of that. Like this line here, this angular trend line right here. In fact, let me make that stand out so you can see it better. You know, it looks like I marked about that wick, but I marked that on a shorter term chart. I zoomed in, or I zoomed out, and I marked it as, you know, at a body. So you can adjust them later if it makes sense to on a longer term chart, where you see a trend line that goes through a wick instead of a body, or marks a wick rather than a body. For the most part, I'm trading on a 1 in 5 anyway. So I'd rather look for the solid bar, the solid open and the solid close. Like if I was to mark an extension to this candle, which I wouldn't because it's you know, just a couple pennies compared to this candle, I wouldn't mark this as my target up here on that wick. That was weakness. Even though we traced some of that, it was not worth marking as a target to trade this doji.
Makes sense, Jeremy. Thank you.
No problem. All right. Well, we'll see you guys tomorrow morning on YouTube, and tomorrow afternoon we got some excitement coming, so stay tuned. Like, subscribe, hit that bell. Tomorrow's going to be an interesting day. We'll see you guys around.